Hey everyone, I've been getting a few questions in regards to the difference between range trends and normal trends. So I thought I'd put together a bit of a video while we wait for our TPs on Sol. So what we have in this area here is we have ranging. So we're on a 12-hour time frame. The important thing to note is that when you're trying to work out what time frame the range is created on, it will be two candles, and that is the actual pure time frame. So in this instance, you've got three candles running up, so that's some other time frame. You've got these two candles coming down, so that's a 12-hour range. Two going up, 12-hour range. Two coming down, 12-hour range. The reason this is important is because range trends effectively, when they get created, they are a changing price point because they are a diagonal line. However, when they get broken, they'll target the top of the range. And the reason it's important to know what time frame the range actually exists on is because you need to know what size candle needs to close over the range trend to actually break the range. So what we'll do is we'll start, let's actually put the replay tool back on. You can sort of see how this works. Here we go. So first of all, we get our range. We run our first trend line like that, from accumulation to accumulation, above the range. You can see this candle wicks down to the hold, wicks up to the range, back again, as this whole candle tries to fight this range. But there is no hard close. So to be a hard close, the wick can be touching, the body must be separated from that trend, and it has to be an accumulation to break to the upside, or distribution if it was a lower trend. So right now, if all we were doing is waiting to take a trade on this range trend, the first thing we would do is we'd mark out where our range top is, which is here. We'd notice that that range top has been hit and it's created a rejection, so it's probably not going to hold in the future. So based on that, we could probably target whatever's going to be up here, or maybe even something back here. So let's put some targets on here. Not that we've had our break yet, but here we go. We got this target up here, range top, untested. And we got that one in there, which is a range top that rejected. Okay, so these are all sort of targets that would be above this range top. So we'll just leave those there. And now let's just have a look at how this goes. So let's go to our next candle. Okay, we reject from the range trend. And once we've got through this, I'll then go through and put normal trends on it as well, so you can kind of work out what the difference is. This range trend just doesn't change, doesn't move. That's the point of it. It stays right there. When it breaks, it's going to target this level easily. It'll probably get through it because it's already tested. It'll target that. That could reject it. That doesn't reject it. It'll target these. So let's just on looking. Okay, so that gets over it, but it's not a hard close, and it can't hard close it because it's on the line. And down we go. And we'll just ticking along, rejecting, building hold levels, grabbing liquidity, back above the line. Oh, are we going to get a hard close? Not that candle, it's blue. Not that candle, it's blue. Got that one? No, back below the line. And down we go some more. So this is how range trends work. They are the most important trend in any range, and we haven't broken it yet. Still rejecting off it. Still rejecting off it. You can see how many short scalps you could take here, how many long scalps you could take back to that trend. Okay. Gotta love it. Okay, so now, and this is sort of what I get at when I talk about probabilities. The next candle that opens has a 50-50 chance of breaking the trend. And the reason for that is because it could just close blue and go back below the trend, but it could close an accumulation and the body would be above the trend if it did that, so therefore that would give us a break. It also looks like it might create a hold level to try and keep the price up above that trend. Let's just see what happens now. We just broke the trend. Now, range trends have a very high probability of a retest, so often you would wait for the retest and then the pump. They don't always retest. So sometimes you wait and you never get your retest and the price just goes up and cry a little bit inside about the trade that you missed. But if you're doing it on high leverage, you should be waiting for the retest. If you're doing it on spot, well, you just buy it and make 5% on your bag. See, there's our retest. And there's our pump. So the first target becomes this level. If it closes over that level, it'll target this level. But because this is a rejected break level, a rejected break level, if closed over, is more polarizing than a normal break level. So if it closes over that, it will probably just blast straight through that. And that's when you would look for these higher targets. So let's see what happens. We close over it, we bounce off it. There you go. We go up to our higher targets. So that, in summary, is how a range trend works. Now, how that differs from normal trends, just move all that. Let's go back to, yeah. At the very beginning, this is actually both a normal trend and a range trend, because any trend is a normal trend. So there we are. On that next candle, go above it, but we don't hard close it. We go down, down, and we create this other yellow candle here. Now at this point, we can array that trend by taking that pivot point, moving it to that pivot point. So now we have a hold level and a break level up here, just that and that. And if we break this interior trend at any time, we have a target of this trend, that hold level, and that break level would be our target. So there's 3 different targets based off that. A little bit more complex than range trends, which really just are designed to leave ranges. Okay, so the next candle could break it, and it does. So now that this candle has broken this interior, that interior moves like that, which doesn't really look all that normal. But as you can see, it kind of has confluence with that sort of rejection that we first got in there, as if that trend was always there. But it's also gone outside of that range trend, but the range trend doesn't change, so it just stays as it is. Drop back below. Now we have, oops, wrong tool. Now we have this trend. And we can open on the other side of that trend, and if we do and we hard close it, then we can test one of these other levels. So unfortunately on that previous candle, the thing is it already tested the level as it broke the trend, so there was really, job was done there. When you're in a really tight range like that, you often don't then get continuation to some other level. So we'll just see what happens on this next one. Nope, goes down off that range trend. Now that might be, got to zoom in. Nope, it's on the line, so that's not doing anything. That doesn't break it either. That does. So this trend can now shift to there. And we're opening the candle underneath it, so it's still going to be resistance. You want to see candles on normal trends more like that. You want to see no wick on that. If there was no wick on that, the next one would open on the other side of the trend and it would have a better chance of actually moving up. At this stage, it's going to open under trend, and even if it does move up, it's not going to be a sustainable move. And there we go. We test and reject off that normal trend. Comes through there. Now we retest the top of the range trend. We haven't broken it. We keep rejecting. So now what you got to do is wait for another yellow candle. should get somewhere. There we do. But unfortunately, we've got a big wick on it. So we now get this trend that runs through here, but we're underneath it. So we've got to get above that. We've got to hard close it. So this is what I sort of mean by positioning. This candle hits the trends, comes back down, but the corner of it is positioned in such a way that the next candle can break both the normal interior trend, and it could move up from that to this trend. And so then within another couple of candles, you would then have the ability to actually break the range trend as well. So it's getting close. Rejects off the range trend. Goes back up. So this is a dive of the normal trend down to the break level of the accumulation range to go back up to the trend, which is another type of trade that I'll do some videos on one day. We now are in a position where we are above both normal trends and range trend. We can open a candle. If it closes an accumulation, we have a hold level, we break out. Because not only are we actually in a position to just send it past the range high, we are in a position to break the interior trends as well. And that's the one that does it. So normal trends like this one down here, they are less likely to get retested. So range trends quite often get retested. Normal trends, it's a bit of a myth that they get retests. A lot of people take trades on normal, or they wait for a retest of a normal trend, but they are not always retested, whereas range trends have a high probability. And that's why a lot of people who trade trend breaks, they get it right a certain amount of time. If they understood the difference between the two types of trends, they'd know which ones they should wait for and which ones they just shouldn't bother waiting for. And I think we know the rest from here. Off we go. So hopefully that gives you a little bit more insight into the difference between normal trends and range trends, how you follow them, how you array them, and how some of them just simply stay in the same place the whole time until they're broken. Yeah, if you like the video, subscribe and hit the like button. And if you want more info on this, come join us in the Discord, and you can ask whatever questions you want. And there's live sessions every week and so on. Cheers. Bye.